that?
I think it's a 4 or 5.
However long we go. Okay. You want to stay till 5? I'm not staying after that.
As long as they...
Yeah, why? What do you guys want to work on first? You want me to make up a problem and you work it for recording all the different types of investments? Or do you want to do a cash flow problem first? What do you do? You want them both at least?
Yeah.
What do you want to do first?
We'll start off easy with
which is easier? The investment ones are easier?
Yeah.
No. I think I got to tell you guys this. I think they are both intuitively obvious. I'm sorry.
Cash flow, I'm still working out.
I don't know why you guys are here. You should already know it and be thinking, I'm kidding. That's a
Cash
joke,
flow,
right?
I just need to work on the
Yeah, which one to do and keeping yourself straight.
That's okay.
If you get it conceptually, first you do it mechanically, right? And then if you get it conceptually, you'll be, oh yeah, that's why that goes there. And then you remember where to put it. Think of the journal entry. If I bought land, I debited land and credited cash. What happened to cash? Went up. If I sold land, what happened? I debited cash and credited land. So now what happened? Cash went up, right? Amen. Okay. So if you just think about what happened, that'll really help. Okay, other than things like depreciation, gains and losses. Okay, you want to make up on them? Let's do a company, and you guys work it. All right, let's do. What are the different scenarios we might have for different types of investments other than held to maturity bonds, which will be on the final, right? Yeah, okay. So you know how to do investments in those. What are they? What are the things? What is the first piece that you worry about? How much? Yes. How much control? You answer the question, how much? That's the C button. Okay, how much? And what are the ranges? You have control if you have what? 50 to 100%? Okay, that's it. More than 50, right? 50, you just, no, not control. Yeah. Okay, and then what are the ranges?
Significant influences, 20 to 50.
Okay, and these are just rules of thumb. What you really look at is, do you have significant influence, right? You know, and you help run the company. So this would be 20 to 50%, right? And then no control, I guess, huh? And what do we call that? What range? 1 share to 20%? Sound good? So the first decision you make is where am I at, right? Then if you are in the no control category, what are the 3 possibilities there? What do you look at? Instead of how much, it's how long. You got it. You're there. Okay, so then how long here, and what do we do? That's just in this one.
In the no control,
no control.
Use 3 different types.
Yeah, so what's the first one we do? Okay, 1 day to a few weeks.
That's why I was confused this morning, because
That said 2 months or
few
something,
months.
you have to make a judgment call. You know, do you think that's a trading security, do you think that's available for sale short term? Companies make the judgment call on it. I think it's available for sale short term.
So after a month, it'll be available for sale.
I don't know.
It's like a gray area.
What do you think? It's gray area.
Okay.
The reason all these jobs are professions is because you have to decide.
Yeah,
it's judgment. Right? It's judgment. Gray areas. Because if it wasn't a gray area, we just computerize it. Right? So yeah. So 1 day to a few weeks. And what did you call those things? Somebody said
trading security.
Yeah, that's a trading security. Investment in a trading security. Good. Okay. And then what's the next category?
Investment in available for sale short term.
Up to 1 year, right? Yeah. Available for sale short term, and then over 1 year. Available for sale long term. Okay, and then in the significant influence category, what do you call the investment?
Investment in affiliate.
You got it. Put the company name on it usually, huh? You can put the company name on any of these, of course, right? But usually if you have trading securities or available for sale, you have a whole bunch of different companies. You just use one account, right? But in an affiliate, you probably only have a few of them, so you'd have one for each one of them. Close. Okay, and then subsidiary, certainly that'd be true. Oh, I gave it to you, right?
Yeah,
control is subsidiary, investment, and subsidiary. By the way, you guys, this is valuable knowledge. The whole world doesn't know what these things are. You didn't used to, you do now, don't you? This is really valuable. You're building your toolkit. Keep it. Keep it. Okay, anyway, what method do you use of accounting? In the first case, no control, I'm taking what the market gives me, so I call it market value method. And what we do is we mark to market. We adjust whatever or to market value, or if it's long-term, at the end of each year, we keep adjusting it to market value. Got it? Okay, what do we do for significant influence?
You use the equity method.
The equity method, which means my share of the equity is my share of the income, and it's my share of the dividends, right? So I'm keeping track of my equity interest, so we say there. And then what do you do on, if you have control? Consolidation. All right, everybody good? So I'm going to give you some different ones, okay? And you guys work, so I don't have to do anything. All right, so here we go. I am buying stock in XYZ company, okay? They have 100,000 shares issued and outstanding. Right? That's issued less treasury stock. What's treasury stock? It's the same number, 0. Right? Okay. So issued and outstanding. All right. And let's say it's got a $1 par. It's got a $5 market value at the beginning of the year, at the time I buy it. Okay. Okay. That's the date I bought it. It's got a $6 market value at the end of the year. We're kind of happy about that. The company has net income of $80,000. The company pays dividends of $20,000. This is at the end of the year bonus, right? This would be the purchase date. Very good. All right. And this company, XYZ company, has equity that looks like this at the date of the purchase. XYZ equity. Common stock. Well, how much would it be common stock? There are 100,000 shares. It's, I think that's how much I'm going to pay fine. What's in the common stock account? Yeah, it's 100,000 shares at $1. 100,000. That's going to be on the test, right? It won't be on the quiz. It's on the last quiz. Okay? Right? You record them at par. And then let's say we have additional paid-in capital on common stock of 200,000. What was the stock issued for, you guys? $300,000, right? You debited cash or whatever the assets you got were for 300,000, didn't you? And you credited common stock for 100,000. And you credited additional paid-in capital on common stock for 200, didn't you? And then what happened? They made money, and the value went up to $5 a share. And now by the end of the year, it's $6 a share. Got the idea? Yeah. Right? It started at 3, didn't it? And they issued the stock. And then let's say retained earnings is $150,000 a share. Okay? What's that? That's all their net income plus their net losses plus their dividends up through the beginning of the year, right? This is all at the purchase date, okay? This is all at the purchase date. Everybody good? Okay. Oh, and then one other thing. At the date of purchase, I think that building, this is on the same date, right? Building is on the books. Book value is, I don't know, what do we got, 500,000 here, company? 450. We've got a building at $50,000 on our books, okay? And the market value of that building at that date, got the idea, is $55,000. Okay? Everybody good? Okay, so here's what I want you to do with all of that. Right? Let's do this. Okay. Let's do these. 1. I buy would relate to that, okay? All of them. And on a quiz or test, I won't just say all of them, I'll tell you what they are, but you know what they are, don't you? Let's say I buy 1,000 shares. And part A of this one, B and C, would probably be what? If I have 1,000, how much control do I have? You're 1%, you guys. None? By the way, if I buy 60,000, what kind of control do I have? Out of 100. Total control.
Yeah.
What's the minority interest? If I have 60. They got 40. True? Okay, just let yourself think. You're just fine. Don't try to remember. Okay, so what do you want to know for A, B, and C here? So if it's only 1,000 shares, what would make a difference now?
How long?
How long? So let's say I'm going to hold it for a few weeks. That's one, right? That's part A. Part B, 9 months. Separated enough to tell, huh? Part C, 5 years. That's what I expect to do. Okay? Then I need one more thing. 3. I buy 30,000 shares. Okay, guys? Got it? Go. Do them all. I want you to do 1, 2, and 2A, B, C, right? And then 3. And I want you to handle what? The original purchase, right? The net income, the dividend, right? The ending market value. Okay, you're going to handle all those. And when are you going to use all this stuff over here?
Did you say for how much something was? The equity?
Because 100,000 shares, about 30,000. Is that what you need to know?
Yeah.
Yeah, okay. So what category are we in number 3? I own 30%, you guys. Category.
Affiliate.
Affiliate, got it. You're there. Equity method. Okay? So when am I going to use all this stuff over here? Consolidation, you bet. And when you do the consolidation, you don't worry about the net income or dividend of the consolidation. Just ignore them. So for the consolidation, just buy it and then the elimination at the purchase date, okay? Do that. Okay?
Then you go buy. You guys are going to buy how much?
And I would think something like this, I'll tell you, if you could do this in a half hour, you're good. Okay? If you could do it really accurately in a half hour, you're pretty good. Right? That's a big quiz right there. Okay? So let's see what you can do. You have them straight. So I won't give you all those, obviously, on a quiz. Not on the test, Between the quiz and the test, I will. Quiz test is fine. This is a good day to get outdoors and stuff. 17 maybe. I'm not sure why a police officer is sitting over there with his lights flashing. He's been there a long time. Yeah, because when I walked over across the road, he was there.
Oh, the one who's pulled off to the side over here.
Yeah.
Might be because of the tracking.
Oh, there's track. Oh, because the track over here. I see. Yeah, because they use both sides. And, yeah, the passengers are probably.
Yeah.
Because he got out of the car when I walked across the road, and I thought, I'm going to get a ticket for jaywalking. There's no crosswalk there, right? But there's a sidewalk going down too. I don't know why we don't have a crosswalk if we have a sidewalk. That's kind of weird. And a bus stop on the other side. But in Kentucky, nobody stops for pedestrians anyway. You guys ever been down to Florida? It's nice.
We don't know what
Sure.
jaywalking is.
Yeah, we don't have jaywalking here. You try to kill people that are in the middle of the road. You know? People jaywalk and drivers ignore pedestrians. It's crazy. It's crazy. It was really fun down in Destin, Florida. You know, you'll walk out of the building and all the cars just stop. You know, if you're anywhere near the road, you're going to get a ticket. Yeah. So they don't want to kill their customers, I guess. Here, but apparently we don't care. This is probably worthwhile, I think. Check it through one more time, look it up, and think about it.
I'm gonna do it on my own in a couple of years.
Yeah.
Usually you have them on Wednesdays. I've got class at like.
Oh.
So I've only been
You have a
able to
Monday,
only
Wednesday afternoon? Yeah. Yeah. I forget that Friday I don't have a class in the afternoon, so I was telling people I was occupied. Only had a couple hours in between. So if you guys know any high school kids who are seniors who are going to come here, have them get hold of me about the summer scholarship. It would be 6 free credits. And it really doesn't take any money. What happens is they start school earlier, and then instead of doing 18 credits, you do 15, a couple semesters of class size. Right? So if you know any kids that are, gung ho, ready to start, you have to do it in this class and one other one, English or psych or natural sciences. It's a high school anyway. So I'm trying to get that put together. So enrollment's going a little bit better. Like I said, there's lots of jobs. We don't have enough students. So we're trying to fix that. We used to have a lot more accounting majors. It's too damn much work. Get students to come in and go to college and give themselves a good term. Ready? Let's try number one. What would it be? 60,000 shares is consolidation dividend. So on the date of the investment, what would we do on the date of the investment? Deb, what? Investment in sub, what is XYZ? Okay, 60,000. Everybody got that? And it's, what do we pay? $5 a share, 60,000, 300 grand. Credit? Yeah. Okay, then, if we were going to do it, you'd get the dividend. And of course, how much of dividend would you get? I told you you don't have to do that, but 20,000 times 60%, 12,000, right? You debit cash and credit dividend income probably, but then what you have to do is get rid of dividend income when you consolidate. That makes sense? Right? Because you have it, right? So let's pretend there wasn't a dividend for this one, okay? So what I'd like you to do then is do the elimination. No, I'll make it a separate problem. I won't even give you a dividend. Okay? Just to keep it simpler, there's enough to worry about here. Okay, elimination. That'd be at the same day. It's the same day, right? If you did the investment. Because if it's not the same day, then you have revenues and expenses and all kinds of intercompany stuff going on that you'd have to eliminate that too. Okay? So in advanced accounting will do that. Okay? so elimination, how is that gonna work? What are you gonna eliminate? The investment's gotta go, right? So, and this is on nobody's books, right? You got a worksheet. You got the parent, and you got all the subsidiaries listed, all their debits and credits for all their assets, liabilities, and equity. And you're gonna add them all up and put them in 2 columns. Okay? But first, you're gonna do an elimination, a bunch of debits and credits for the things that you don't want on the consolidated financial statements. You just get rid of them. So it's just a worksheet to do the statements. Everybody's got that idea, right? That's clear. Okay, all right. So what do we do here? Let's get rid of the investment. Let's get rid of that. Did you guys do that? And that was how much? 300,000. What else do we want to get rid of? All their equity, right? What are the equity accounts? So those guys right there, right? Common stock, 100,000. Additional paid-in capital on common stock, what is 200,000? Retained earnings, running out of room. All right. Retained earnings is what? Okay. And then what else should we have? That generally doesn't balance, does it? Of course not, right? Okay. Well, you want to increase the value of the land? That's right. We can do that. That's 5,000, right? I'm good with that. Land. And then what else will there be? Well, let's see. Here's the deal. If you don't remember, right? Say you don't remember. Say you remember to do land, but you don't remember anything else, right? Or you know there should be goodwill and a minority interest. If you know that, you write them down and then figure out what the amounts are. But maybe you don't know what either one is, right? Doesn't matter how you approach this. I mean, I need both of those, aren't I? Okay? So what is my cost on this thing? What did I pay for this investment? 300, right? 300,000. What did I buy? I bought 60% of their equity, right? And how much is their equity? It's 100 plus 200 plus 150, right? It's 450. So it's 60% of their 450,000 equity, isn't it? What's that number? 270. So there's what I bought. I bought equity of 270, book value, right? And I gave them 300 because the market value is more than book value. That's all that is, right? Okay? The excess is 30,000. You got it? And then what am I revaluing? Land. Increased land by how much? 5. So what's left? $25,000 of, I don't know what other assets to put it on. So I might have land, building, equipment, inventory, right? All kinds of things. Could go up and down in value. Inventory might be worth less, receivables might be worth less. So I revalue everything. Revalue their debt, everything to market value, right? Because I bought the business, I can revalue it to market value. So what are we going to call this stuff? Goodwill. It's the excess you paid over the fair market value of all the assets less the fair market value of all the liabilities, right? We paid 25 extra. What's that for? Their employees, their customers, their reputation, right, guys? All this stuff is not in their balance sheet. So 25,000. That's the goodwill. Do we balance on our journal entry? No, we need minority interest. So even if you didn't remember minority interest, you'd add up those debits. You know you don't have the same amount as the credits, right? Oh, there's something else. It's minority interest, isn't it? If we own 270 out of 450, the other 40% is who? It's the minority interest. Got it. Okay? And what's that going to be? 40% times 450, right? How much is that? 180. And of course, it's 450,000 less than 270, isn't it? That's the minority interest. We're there, aren't we? Credit minority interest, and then make sure your journal entry balances. Did you all have it right? Pretty much. What's that?
Can you repeat again how to get the goodwill?
Okay, I knew it cost 300. I knew I bought 60% of their equity. Their total equity is 450. So what I bought at book value, their assets less their liabilities is their equity, right? So what I bought at book value was 60% of their assets and 60% of their liabilities, but I could just take 60% of the equity, can't I? Okay? 60% of the equity is 270, isn't it? So I paid 300,000 for something that has a book value of 270. The excess I paid over book value is 30. But I know that 5 of that is due to land The other way you could do it is you could do the land, you could do the common stock, the additional paid capital, the retained earnings, the investment in the sub, put in the minority interest, and guess what? I need 25 there. So you don't have to calculate it both ways. But if you do both ways, that's safer, right? You'll know if you screwed up. That'd do it. Okay. 6 of you sitting there. You guys getting all the points on this? You're going to nail it, aren't you? Okay. And this isn't easy. This is pretty tough stuff. If we imagine we've done this the first day of the class. What did we do? Right? So, yeah, we're getting there. We're getting there. I like to believe that anyway. All right, let's try another one. Let's do 2. All right, buy 1,000 shares. So we're going to do this 3 different ways, aren't we? Okay? So maybe I'll put it in 3 categories. Okay? Let's do A. First thing is we, on the date of the investment, right? How many are we buying? What did I say? 1,000 shares?
Yeah, 1,000 shares.
$5 a share? $5,000? The first one we said is a few weeks, so we have, and we have no control on any of these, right? So investment in trading securities, I like it. How much? 5,000. Credit. Cash 5,000. Okay? Oops, that's a credit. Okay? Come on, keep debit, credit. All right, and then in B, you see why you don't want to put them in a row? Easier to tell them apart, right? First left, right. Okay, on B, what would that investment look like? What would we call it? 9 months, right?
Investment reporting.
Short term?
Yeah.
How much? 5,000. Credit? Cash. That looks a little better. Okay? On C.
Investment in the Muslim for sale long term. 5,000.
Credit. Excellent. Okay, then what happens? Let's see, they reported net income of 80,000. How much of that net income do I get credit for? Seeing as I didn't run the company. None. So what would you say about the net income on all of them? No income. That's it. So if I give you a slot to say something, don't just leave it blank, right? If I just say do all the entries, you don't have to say anything about that. Okay? Okay. Then what happens? They said they paid a dividend of 20,000. How much did I get? I own 100 of this. 1%. I get 1% of the 20, right?
Yeah.
Or you can take 20,000 divided by 100,000 shares if you're going to be $20 or 20 cents a share, right? How many shares? 1,000. What do I get? $200. Either way, it's $200, right? Any way you calculate it. Everybody got the 200? So what did I get? Cash? And what do I want to call it? Dividend revenue or dividend income. Either one's fine. See it both ways. Yeah, that's what happened, right? Are they the same for all of them? Yes. I'll probably only give you one of them. Just be careful that you identify that it's less than 20%. Now it's a marketable security, right? One of these. And then it's either a trading security available to sell short term or available to sell long term based on how long you're going to hold it. That's it. Okay, what's the last one going to be? Same thing, right? Excellent. Okay. So what's the last piece? Oh, the market value at the end of the year is $6. It went from 5 to 6. What do you have?
Gain.
How much gain are you? It's unrealized, right? Because you didn't sell the stock.
$1,000.
It's 1,000 shares at $1 a share?
Yes.
$1,000. Okay, good. What do you want to do? Debit what? I'll put it over here. Investment in trading securities. The 1,000? Credit what for 1,000? Unrealized gain. When it was a loss today, it was a debit, right? Of course. Because, credits increase income, gain, debits reduce income, loss. Felt like you always knew that. What kind of account is this thing?
Income statement.
Yeah, income statement. Why?
Because they don't expect it to change.
Yeah, you don't expect the price to change in the next few days, right? So you'd probably have to really have the gain when you sell it. So you go ahead and put it on your income statement. Recognize it in your income statement. What What's the next one gonna be? Debit investment in what? Still the same amount, right? It's $1 a share on 1,000 shares. Debit in available for sale, short term. I'm gonna get writer's cramp doing this. And credit what? Still unrealized gain in it. On what? Available for sale, short term. Okay, what kind of account is that thing? Other comprehensive income, which is a equity account, right? Everybody good? Why do we put that in an equity account? Because we think the price will probably change before we sell it anyway, so we don't want to hit the income statement with it. We'll wait until we sell it. You can put it in the income statement. That's all. Okay? So it's in this other comprehensive income, new equity account, right? Between paid in, or there's paid in capital with retained earnings, right? And then there's also this other comprehensive income, another category. Okay, I'll actually write this down. What's it going to be on C? Investment in available for sale what? Long term. 1,000. Credit what for 1,000? Unreal gain on available for sale. Long term. The reason I'm doing this is there are people at home that haven't been studying and they're going to be panicked and watching this, so I want to make sure I write down everything. I know I'm annoying you guys. Right? And if people at home watching this and they weren't preparing and weren't coming to class, I don't care if I'm annoying them. I really don't. If you come to work for me and you don't do anything, it doesn't bother me to fire you. Not the least. Right? We're charging people for you to do work. If you don't do the work, we can't charge them. That means the other employees, us. So if all of you came to work on an audit for me and he turns out to be the one person who doesn't work, what do we all want to do? Get rid of it. That's terrible. But you know what? We'd still enjoy going to the tavern and having beer with you. Well, we don't go to taverns anymore. Anyway, the bar and having beer with you, right?
You won't be able to buy some beer.
Well, you'll have to buy him beer, but he's a really good guy and he's fun to party with. So, you know, when we're done working, you know, we'll hang out with him a little. He'll already have been there for 3 hours. It'll be all right. You know, we'll show up, dead tired. Yeah. Good thing about it, though, is if you're dead tired, one beer is all you need again. Fall asleep. Right? So just think about it that way. Think of the money you're going to save, too. Aren't you glad I picked you? Yeah. That's not who you are, right? Not who you are. You're a serious guy. Works really hard. Yeah. Yeah, me too. Yeah, right. Okay, anyway. So what kind of account is this thing, guys? It's long term. Available for sale. Other comprehensive income equity. We got it. Okay. All right. So let's do another one, huh? I guess the last one. Buy 30,000 shares. I can't believe this thing is working. I shouldn't say that because it's working. Okay, so what's that one going to be? I've got 30,000 shares. I have what? Significant influence, don't I? Right? So here we go. What are you going to debit? Investment in affiliate? You don't have to, but you usually would. Did I do that on the sub? I can't remember.
Did that today,
Yeah.
Oh, yeah, but usually you would. You got only a few of them. You want to be able to tell them apart. You want to use different accounts. If you call it investment in affiliate, what if you have more than one? Right? If you only have one, I guess you call it investment in affiliate. For our purposes, now it's fine. You put as much label on an account as you need so you can tell what it is. Make sense? And you never put on more. What for? Okay? So yeah. So how much did we pay for it? 30,000 at $5. 150, is that right? We gave him cash, right? Then what happens? I guess they had an increase in market value. What do we think? We're thrilled. But no entry. Yeah. Change in, yeah, we're doing the equity method. So change in market value, no entry, right? Because I am not holding this for the increase or decrease in market value. Well, I don't want decrease, but I'm not holding it to try to get an increase in market value, am I? What am I holding it for? It growing through profits over time. I'm going to keep it. Okay, it's a long-term investment for us too. Okay, then what are we going to do with the dividends? I guess we got 20,000 in dividends. What do you want to do? What do we get? 6,000, 30% of it, right? 20 cents a share on 30,000 shares, 6,000. Credit cash and credit investment in affiliate because I am giving myself back some of my investment. The way I grow the investment is I run the company and I have it earn money, right? That's how you grow investments. Make sense? All right? And then if I pay myself some of the money I earned, guess what? I have less investment. That's it. Okay? thing is, am I in control or not? Do I have control or not? If I don't have control, no control, I'm just taking what the market gives me. I didn't make the earnings happen, that's all. Okay, anyway, so then the other thing is, I guess that we report the earnings, right? So I'm going to have what? Income from affiliate? Or equity interest and income from affiliate? Is that what the author calls it? I can't remember. This one does.
I didn't know it was
They had a big fancy name for it, didn't they? In the book?
Yeah, it was like a long name. That's how you income from affiliate.
Yeah, okay, yeah.
Probably easier.
So it's easier. Okay, and so how much is that going to be? Gee, it's 80,000 income. I earn 30% of it. I think it's 24,000. Debit what for 24,000? Investment return. It gets to be a lot more fun when you're working with people who know what they're doing. Huh? Yeah. It is for me too. It's not very challenging for me. It's more challenging trying to get people to do it. Yeah. But you know, we go fast now. Imagine when you do an intermediate. Yeah, your heads will just be swimming every day. It's really fun. It's just okay. Okay, tell me what the ending balance is in investment and affiliate. It's like 168 to me. Put in 150. Took out 6. Put in 24. 168. Okay, so what happened? As the company I've invested in increased their retained earnings, it went up by 80. My share of it increased my investment. Got it? As they reduced their retained earnings, right, by 20, that's what would happen, right? Wouldn't they debit the retained earnings and credit cash? Then what happened? I reduced my investment by my share of it. So I'm tracking with their change in equity. Equity method? Got it? That's all that's happening. Okay? Everybody good? By the way, how did this 80 increase their retained earnings? They closed all their revenue expense accounts, gain and loss accounts, to retained earnings, right? So they increased their retained earnings. Got it? Enough. Let's do something else, huh? There's another problem. We're running out of pages. Let's go to chapter 12 again. Maybe what I'll have you do, I wish they had more that had they like to break it down into simple little exercises instead of just giving you the full-blown problem, you know? And when they do that, they make them too easy. Not really. How about,
I don't know. I'm gonna go back.
we did 12.5, right? Key account approach. By the way, this key account approach, that's fine if you want to mess with that. I just prefer just to do it. You know, those are true. Maybe what we'll do, I know it's not good.
The only thing that question was just cash flow statements, but we did that in class.
I know what we could do. There's an income statement. On page 178, there's an equity statement, and on page 179, there's a balance sheet. And there is no cash flow statement. Create one. See if you can do it.
It's ambitious.
See if you can do it.
Oh, look.
No book?
No book.
From which one?
God.
Oh,
We have a book.
Hey, I got a book now. We're sharing.
You sharing a book?
Yeah.
Do any of the three of you have a book?
That's Matt.
I have a book. She's got one. All right. Okay, now here's going to be the problem. When you get to um, doing the purchase of plant and equipment and the sale of plant and equipment, because on the income statement, doesn't it have a sale, gain or loss on a sale of equipment of something?
Which page is this?
On the income statement. What page number are we on?
We're at 101.
Again.
177. It has a gain and a loss?
No, it's a loss on disposable of assets.
Loss on disposal of assets. So let's say that's plant and equipment. Loss on plant and equipment. Okay? And then what happened? How much was plant and equipment to begin with before she did that? Yeah. And that's net depreciation. Okay, so what's the difference between those two? 27 plus 4,100, 31,100. I hereby decree that they bought 50,000 of plant and equipment. So we're going to add to that question that they purchased $50,000 of plant equipment. Okay? See if you can pull this off. That might be enough to do it. Everything else, figure it out. And what they did was that net is plant and equipment less accumulated depreciation, right? Okay? See if you can do this. This is not easy. This is serious stuff. That's big. Folks at home, the problem is on page, what was it, guys? Page 177, 178. The balance sheet and income statement. Prepare a cash flow statement from it. Okay. That you can start it. And then I said that they purchased during the year, it's probably 50 million, right? It's Chipotle, right? So I said 50,000, but if I throw in thousands, yeah. So 50 million of plant equipment.
50 million.
Yeah. So they must have sold some too, right?
Yes.
And then there's accumulated depreciation too. Do they show depreciation expense anywhere there?
Yeah.
They do in the income statement? Good. All right. We're good. All right. Go, go, go. Lay out that statement the way you want it to start plugging in numbers. You know what you're doing.
Really, I get that, considering that you said that there was some meeting jobs that you're looking into.
By the way, you know what you do for a living? Do. You bullshit people. Because you have to know what you're talking about. That's the trick. Any profession is worth it. What do attorneys do for a living? Talk. What do doctors do for a living? Talk. Engineers? Talk. I mean, you also do other stuff, but a lot of it is talking. Motivating people. Convincing people you got the right idea. Right? My idea is better than somebody else's. Not really, but I talk about what it is. You guys want some more light in here? Pretty fine. Could use more. assume on any debt that they just borrowed, they didn't repay, right? Something like that, or they just repaid. Same thing with equity, right? Just assume it's going one way. The only one will have to go both ways is the sales. They didn't have any other gains and losses, did they? Non-operating stuff. Just the one. Just one gain or loss to income statement. You don't need to do a T account for plant and equipment and accumulated depreciation. Just use one and put all the entries in the one. Makes sense? Merge them together. Because they didn't give you accumulated depreciation, so won't be able to. We can still do that. good, now it's raining, so I don't need it. Nah, that's great, that is fantastic, I appreciate it. Okay, yeah, I'll be around to the left, I promise. Okay, thank you very much, bye-bye. It's nice having a 15-year-old car that takes forever to get fixed. I don't know what happened to it. Forever to get parts. I love my Miata though. It'll last longer. I mean, we gave it to my grandson when I got him. I only have one grandson, so that's just, but I have 3 granddaughters, so, and he's the oldest. And how old is the car going to be when I die? Already 15. But they good care of it. Me out of it. I'm 40 years old. They kind of cool with me. My wife's an engineer. I'm buying it.
No, it's in Mexico.
It's 4,000 this year. So yeah, maybe I. So you guys did this? Oh, sorry. Did you set up the statement to start?
Yeah.
Everybody did that? No. What's the company name again? What are we doing? It was Chipotle. Yeah, pretty good food, even though they poison you. Isn't it sad that things can happen to companies? You get big, they have one supplier supplying a whole bunch of different places, so they have the same problem everywhere. That's what it was with poultry, right? With the food poisoning. Yeah, so they're a good company. Chipotle company it is, or something? Okay. And then what? Cash flow statement or statement of cash flows? And then what? What was their end? December 31st?
It's March 31st.
So that was a quarter.
Yeah.
So,
Second of work.
so we start the quarter.
I guess we're doing a quarter. Or the quarter ended. Into the quarter. It'll still work, I think. Should. Yeah, we're just gonna have one quarter, so. Okay. For the quarter ended. Well, what's the quarter ended? March?
Yeah.
2000 something. All right. So you do that. Then what? Operations. You going down the page halfway. You got that? You got financing. And then you'd have change in cash, right? Increase or decrease in cash. You'd have cash. You guys out there? Did they have an increase or decrease in cash?
They had a
Balance sheet, cash, what?
decrease in cash.
Decrease in cash?
Yeah.
How much did it go down by?
31,200.
31,200,000 really?
Yeah.
Yeah, 31.2. And what we do is up here we write in parentheses, just like they did.
Thousands of dollars.
Yeah, thousands of dollars. Like it. Or you say millions of dollars. Right? You'd be okay. Do 31.2 if you want. Okay? All right, anyway. So, what was beginning cash?
40 million. Wait, 401 million.
1 comma. Is that what it was?
No, it's 401,200.
Oh, 401,200. Okay.
You could have deposit 401, comma 2,
401,200.
Yeah.
There we go. All right. 401,200,000. They got some money out there. Right? Pretty big. Okay, ending cash. 400. Oh, it's decreased. So 378, 379. No,
It's even.
370 even.
Yeah.
I'm sorry. Okay. Look at it. Just put it right down. Okay. So we already got that, don't we? We got a good starting point. What else could we do?
You could do, under operations, change in current assets.
Okay, do that. So current assets and current liabilities, want to do those? What are they going to be current assets?
Short-term investments.
Okay. What are those? Either trading securities or available sale short term, right? paper?
Yeah, but they're gonna say.
39,500. If you have more of the asset, what'd you buy it with?
Money.
Cash. There we go. Got it. Okay. Brackets around it, huh? So how do you know if there's a bracket or not? It's debit, investment, credit, cash. Got it. What else? Any other current assets? Accounts receivable? More or less. What happened? More up or down? Up. How much?
700.
700,000?
That'd be 700.
There's
Oh,
700.
700.
Yeah,
No,
700.
not, okay.
It's like 700,000, but just 700.
Yeah, it's 700,000, so we just put 700. Okay, so it didn't change.
Yeah.
Okay, good. So 700, but it went up, so I collected less than my sales, right, guys? Very good. Okay, what else we got? Inventory, maybe?
Yeah, we get that for interest.
Oh, they have interest receivable?
Yeah.
All right. So they got more. That's what, we don't care how many there are.
Yeah, just put up like 200.
Okay, increase.
Yes, sir.
So we had interest revenue we did not collect. Did you guys agree with that? Debit interest receivable, credit interest revenue. Wow, we didn't collect it. It's included in our revenue and our income statement. This is too easy. But then inventory, are we about running out, or we have prepaids too?
We have prepaid as well.
Oh, wow. Inventory, up or down?
Up 1,100.
One,
1,100.
1,1?
Yeah.
Oh, okay. A million more inventory. Wow. Okay, so maybe things were slowing down for them. Actually, they might have been building a lot of stores and stuff, actually. So you have more inventory right now. Okay, and then prepaids? Is that the next thing?
Yeah.
Is that it?
Yeah. And that increase.
So everything's going up. So can you see how the cash is disappearing on these guys? Yeah. You know, with all these things? How much is that? 40,000? Really? $40 million? Oh, 40 is the whole thing.
No.
Yeah, 40,000. 40,000.
Like I wrote it here?
No, like I said it.
40 million increase in prepaids? Really? I have no idea what that is. But see, these can be kind of interesting. I have to read their notes and find out what was that about. Why did they increase their prepaids by 40 million? You know what it might be is they're paying franchisees or something when they're setting up stores. This might have
Gotta be something.
Yeah, there's something going on. Yeah, okay. Is that all the current assets? Did you put a check mark next to all of them as we went? Be a good idea, wouldn't it? Okay. So current liabilities? Want to do those? What do they have in current liabilities?
Accounts payable
Yeah, more or less.
increased by
2800.
Yeah.
If it went up, I have more cash. You guys agree with that?
Mhm.
Liability up, I didn't pay those. Do they have any accrued liabilities?
Yeah. Accrued expenses payable went down by 29,200.
How much? 21?
29,200.
Wow. Their prepaids went way up and their accrued liabilities went way down. Boy, is that siphoning cash out of the place, huh? Look at those two together. Okay, good. You can see where the cash kind of went down, huh? Okay, any more current liabilities?
Yeah. Unearned revenue went down by 5,900.
It's in net income, right? What they did was they debited unearned revenue and they credited revenue.
Okay.
Right? So if it goes down, I have revenue I recognize that didn't generate any cash. This is beyond this class, but that's what we do in intermediate, right? So how much you go down by?
5,900.
Man, they burned up a lot of cash, haven't they? Okay, any more? I'm sick of those anyway. Good. Okay, so put check marks next to those three. Okay, what else you want to do? Doing good, huh?
We can do some financing.
You want to do financing next? Okay. Okay. What do you want to do with financing? What do they have?
Dividends payable.
Oh, they have a dividends payable.
Yeah.
And is that under current liabilities or is that under dividends
under-
paid? Look at the equity statement. What's the dividends on the equity statement?
So that'd be under current liability.
That's a current liability, you bet. So dividends payable, did it go up or down? Up? It went down. So I paid off some of my
No, wait,
dividends.
No, no.
Yeah, it went up.
Yeah, there was none.
Fuck you guys. Okay. Dividends payable went up. bucks. Everybody agree with that? That'd be right, wouldn't it?
Three.
3,000.
3.
So 3 million. No, I said 3,000. Yeah, I said 3. I think you're hearing things now.
3. Okay. It's terrible having to use human beings to do this work. Machines would be so much better. Yeah, okay, anyway, 3 million, right? Okay, now what? That was another current liability. Well, we could do dividends, couldn't we? Where are dividends going to be? Look at your equity statement, retained earnings. Look at the equity statement. You got an equity statement now. It's kind of handy, isn't it? Let's use it. Let's look at retained earnings in the equity statement. What do you see on your equity statement? What's beginning retained earnings? You guys are scared. What's the beginning retained earnings? What do you got? On the equity, don't they have contributed capital? retained earnings?
671,000.
No, common stock, initial paid in capital, and retained earnings on there?
671,500.
Six, $671,500,000. Yeah, that's beginning?
Yeah.
What's the ending?
The end
This is really good because you're looking at a real statement here. By the way, the real statements have more information on it. These are real condensed, right? But it's all the same stuff, right? It's all the same stuff. With just, more detail. What's the ending?
731,200.
Looks to me like they made a lot of money, didn't they? What was the net income? You got added.
62,700.
62,700,000, right? Yep. What was their dividend they show there? This is the dividend that was declared. They didn't pay 3 million. How much was it?
3,000.
Yeah, it's the 3 million. So they didn't pay the dividend, they just declared it, but I'd still put it there. Okay? Because that's going to go into financing. That makes sense? So it's not dividends paid, it's just dividends declared. How do I know it wasn't paid? They still owe it in the payables. Got it? Again, beyond where we're at, I won't do anything mean like that to you. I guess that's kind of mean. But you got the idea? You do this, couldn't you? Okay, so what do we want to do with these? Where do you want to put the net income? By the way, is that the net income in the income statement, I hope?
Yeah.
Let's hope so.
Oh, yeah.
Yeah. Okay. So the beginning retained earnings plus net income less the dividend, does that work, by the way? Yeah. 671.5 plus 62.7 less 3 is 731.2. Yeah. God, let's hope so. Okay. By the way, there could be other things. We'll worry about that later too. There could be other adjustments to retained earnings for prior period adjustments. Okay, so you have to deal with that too. All right, for later in the purpose. Okay. Anyway, so we're just getting started. So 731.2 is the end. So what do you want to do? The net income goes where?
Under operations.
Under operations. Excellent. How much? 62,700. Excellent. Okay. And the dividend? Where does it go? I'm going to pay some of the earnings to the shareholders. Under financing. And we say this time dividends declared. Notice the author does call them declared on that. The problem I had to do, they called them declared, didn't they? Not paid. That's why. Yeah, what they did was they debited retained earnings and they credited dividends payable. I want to show both. Okay. I want to show the increase in the dividend payable because that's a current liability, right? And then I want to show dividends declared. Now here's the deal. You don't really have to do that. Okay. You could just show nothing, right? Either put them both in or leave them both out, right? So a lot of people will just say, well, I won't do this here, therefore I don't do that there, and it washes. Okay? You can do that if you want. Probably more likely, right? You do it that way. Because they want to pay.
No cash actually changes.
Yeah, no cash changes. So you don't have to show it. But for our purposes, that works, doesn't it? Okay? All right, so that's retained earnings. You can check it off. But did anything happen to contributed capital? You can see it in the equity statement, right? We could use that. And you can also see it, of course, in the balance sheet. What happened to contributed capital? Anything? Did it go up or down, or is it exactly the same? Well, isn't there contributed capital, common stock? Their balance sheet. Is it the same both times? Oh, so do they show common stock and additional paid-in capital, or just common stock? Oh, so what happened if they went up? Is there treasury stock?
No.
No, good. No treasury stock, that's nice. It's something else to worry about. So what you do is you'd add together contributed capital at the beginning of the year and subtract contributed capital at the end of the year, and you figure out how much you grew by, right? Or actually, end of the year, less beginning. You'd find out how much you grew by, wouldn't you? That make sense, guys? So how much did it go up by? So we'll call this, what? Issue common stock? How much did common stock go up by? And it'd be common stock and additional paid capital. And if there's preferred stock, you'd have to do that too, wouldn't you? Right? You might have issued some preferred stock or retired some preferred stock. So that's if it went up, it's issued, isn't it? Spread of common stock and debit and additional paid capital and debit cash, right? We assume everything's static. How much did they go up by in total, the two of them?
62,300.
And that's more cash, isn't it? Okay, and that takes care of the change in both of those accounts. So you can check off common stock and additional paid capital, okay? Are we done with the equity? With everything, wasn't it?
Yeah.
Now you guys, keep it up. Okay, scramble. When you guys go to work, I want your boss to be able to move really fast with you, and you understand. That's what we're doing here, okay? Got it. People hate working with me because I'm such a fast, right? I demand too much. But they love working with me because I do it fast, right? It's a trade-off. So I want you to be nicer people, but I also want you to move really fast, to be able to think quickly, okay? So you just don't have to be the sarcastic guy about it. All right, then what? Do some more accounts. Long-term debt, is there any? They go under financing too, don't they? What do we have in long-term debt?
Notes payable.
Just notes payable?
Yeah.
So they might have bonds payable, notes payable, mortgage payable. They have notes payable. They put it all together. What happened? Up or down?
Went up by 9,600.
All right. What do you call that? Issue long-term debt? Now, what could have happened, probably did happen, right, is they issued some and repaid some, and we'd show both of those, wouldn't we? One is cash coming in, one is cash going out. But we don't know what that is, so we'll just do it this way. Okay? We'll assume it was only borrowed. Anything else? Is that all long-term debt? What have we not done? Investment. Which is what? Plant and equipment? Is that all they have? Do they have other long-term investments?
They do long-term investments.
Oh, let's do long-term investments first. What happened? And there's no gain or loss on selling long-term investments, is there, on the income statement?
And it shows that it increased.
On the income statement, there was no gain or loss, though. Is that right? So you can look and see if there's a gain or loss. If there was, they must have sold some, right? If there's not, I bet they didn't sell any. All there is a gain on the sale of equipment. Is that right?
It says
Or loss?
gain
It's a loss.
on disposal of assets.
Oh, let's assume it's equipment. It could be non-current. It could be these long-term investments, couldn't it? But let's assume it's equipment. Okay, plant and equipment. All right.
Disposal assets.
So let's just say that if that went up, they bought it, right? Okay. So what we do is if they sold some, we'd show cash coming in from the sale, right? And you'd have the gain or loss, adjust your net income, right, guys? Or under operations. And if they bought some, of course, you'd show that too, wouldn't you? So in this case, they bought some. So purchase of long-term investments, is that what it is? Is that what they called it? How much is that? What's the change? How much did it increase by? And we're not just showing the change, we're showing the purchase at the sale, but 20,900?
Yes.
Okay, 20,900,000. So they put a lot of money in there. Okay, that's good. And then what do we have?
Oh, wait, no, never mind.
What's that? Oh, thank you, sir. Yes, it's negative, isn't it? How much would we have been off by? It's debit, investment, and credit cash. Excellent. How much would we have been off by if we hadn't done with brackets around there? Double that, right? Everybody good? 41.8. Okay, and we'd have found it with credit. And we may have done that on something, I don't know. All right, what else? All we have left is property, plant, and equipment, is that right?
Yeah.
You checked everything else? So this is kind of nice. This is a real statement. I mean, it's condensed a lot, but it's a real statement. This is the whole process. All right, so really, there is property, plant, and equipment, a number of accounts for that. Land, building, equipment, and then there's accumulated depreciation on building and equipment, a number of accounts. But what they've done here is they merged them all together, right? So it's plant and equipment, and they say net. So all you'd have to do is say, well, the accumulated depreciation is out of there already, at the beginning and at the end, right? This is net. So if I increase accumulated depreciation, that's reducing the net, isn't it? If I decrease accumulated depreciation, it's reducing the net. Okay. If I decrease accumulated, it's increasing the net. So that's, okay, what was the beginning of this?
795,900.
795,900,000, right? A lot of stores.
Yeah.
Okay. There's a really nice one in my kid's neighborhood in Portland, Oregon. Chipotle is one of the highest rent districts in Portland, Oregon. They live in a little tiny 2-bedroom apartment, so they can live in this really cool area called Pearl. There's a brewery across the street from them, a microbrewery, and incredible restaurants. Art galleries are there. Portland State University is out there. It's just Portland, Oregon is really a nice country. So Louisville, but that area is 10 times, 20 times New Lou. It's like New Lou, but 20 times. It's just incredible. It's really wonderful. You can go out in the evening and listen to jazz up the street and nobody's there if it's a weekday. On the weekends you stay home. Because all the people from everywhere else are there, all the tourists and stuff. Okay, what's the ending? What I was going to say is Chipotle, believe it or not, high rent district. What's this?
827.
Even? So I know I bought at least that much, right? But what else do I know? Tell me what the entries are that would affect plant and equipment net. What do? You might buy some, you might depreciate. What else? You might sell some?
Yeah.
Okay. So do we know how much we bought? Yeah, I told you.
Yeah,
I made it up.
50.
Okay. So what I would do is I know that I debit what? Plant and equipment for 50 million, right? So 50 came in, you guys. You see what I did? Then I'd credit cash for that. So we can certainly put that one on our cash flow statement, can't we? What would that be? Purchase plant and equipment. How much? 50 million. That would be cash going out. Now what would I do? I know what depreciation is. You said it was on the on the income statement, didn't you? So how much was it? Debit depreciation expense? How much? What was income statement depreciation expense? Come on. You guys are too young to be great at
Well,
this.
disposable asset.
How much is
No,
it?
no, anyway, here it is. Depreciation expense. It's 20,100.
28.1. Everybody agree?
No, 20,100.
20.
20,100.
20,100,000. Okay. Now what would you credit, of course? Accumulated depreciation. And what the net here means is they took the accumulated depreciation out, right? So it's got to be 20,100. Now, what is left that we have not done? What do you think's left? The sale, right? It's going to be what? Debit cash. What do we sell? Plant and equipment. When you sell plant and equipment, what do you end up having? Cash, and you'd get rid of the plant and equipment, and you'd also get rid of its accumulated depreciation. Excellent. And then you would have either a what or a what? Gain or loss. Was this one a loss? Is that?
Are we saying the disposal of assets was the...
Yeah.
Yeah.
We're saying the disposal of assets was for plant and equipment. I arbitrarily said that. It could have been investments too, right?
Yeah.
Okay, so it's loss on sale. Okay, that's a debit, right? How much is the loss?
1,300,000.
Okay, this is 1,300,000. Okay, it's the hardest part. Slow down a little bit here. 1,300,000. That's what it is, right? Okay, that's how much they got. Whoops, that's the loss. Yeah, I'm sorry, we're on the front line again. Here we go. Let's try again. That's this one. 1,300,000. You guys good? Now, I don't know how much was accumulated depreciation and how much was plant and equipment, but I know what the difference between those two is. I know what the depreciation, and you take the credit to plant and equipment, the difference is the book value, isn't it? So what was the book value of what you sold? Can you tell me? Come on, you guys, think. I started with this. I bought this. I depreciated this. And I ended up with this. What is the net book value of what you sold? Right? This is net. True? Are you with me? Making sense. You guys are smarter than you think you are. You're just not trained yet. In fact, you're real smart. You're the brightest in the test. That's all we got to work with.
1,200,000.
Was it 1,000,000 too? So what that means is the equipment, building and equipment, right, plant and equipment, less the accumulated depreciation had to be 1,000,000 too. The difference between those two is 1,200,000. So how much? That's a credit. Is that what it is? 1,000,002. Is that all it is? Does that seem right?
No, so it's
795,900 plus 50.
there's gonna be like,
Less 20,100. How much is that?
what do you,
Oh, that's way more than 827, or is it? Maybe I screwed up.
yeah, well, the debits out of more.
Yeah, I got more debits than a few credits. I screwed up. I had to pay them cash to take it away. I screwed it up. Does that work? 795 plus 50, less 1,200, less 21. Is that 827? Does all this here work? Oh, crap. Oh, crap. That's so close. That's how you put one out of the air. Let's say it was,
Got to add some.
yeah, let's say I bought 70,000. I'm sorry.
Oh, yeah, I see what you're saying.
Let's make this 70. I purchased 70 now. Will that do it? Am I going the right direction? If I purchase 70,
You want to purchase less.
oh, I'm going the other way.
Purchase less, you don't
Okay.
purchase, so if you.
I went the wrong way. So let's say we purchased 30. Will that do it? It would, wouldn't it?
Yeah,
So let's say I only purchased 30.
then it's gonna change your purchase for.
Okay, so then that's going to change our purchase journal entry to 30 here.
Yeah.
Thank you, guys. That's good, though. You realize that. I'm impressed. So nobody got this then, did you? By the way, did you get pretty close to this? Everything except this one? You get pretty close when you were doing it? Yeah? Okay, falling out for you? All right, so that's 30 got purchased. So then what must have been sold? It's not 1,200, right? What is it now? What must have been sold? Net sold. 21,200. Now it'll work. So 21,200, and we lost 1,300. How much cash is it? What's the debit to cash here? So what I'm saying is, the plant and equipment we sold would be the credit, and the accumulated depreciation would be the debit. Plant and equipment is more than the accumulated depreciation by 21,200, right? That was the book value of what was sold. This is the book value of what was sold. So how much cash did they get if they lost 1,000,003? They sold 21,200. It's the difference, right? 18,900, is that what that is? 19,900. Yeah. Is that right? That's your only balance now? There we go. So the cash that came in would have to be 19,900. I screwed up. I have a 50. Usually I had a small number. Does that make sense, guys? If you know you have a loss of 1,000,003, right? And you know that the book value of what you sold, the difference between the cost and its accumulated depreciation is 21,200, right? What do you have for? And we know it's 21,200 because we needed 21,200 to make this balance, right?
Well, it's still the balance. Yeah, I don't know.
Oh, I spelled the wrong number.
Yeah, it's still.
13, 13, and 21, and 19,900 is not 21,200.
Take 41,300 out of there, then that's, it's gonna be like 700.
You take 43.
795,900 plus 30,
Yeah.
less
And
2 and 21,100 is not 827?
It's like 800, what, 800 and,
No, we still got the wrong numbers.
yeah. Because the debits add up to 800.
Okay, the depreciation expense was 20,100. This one's wrong then. What is that amount?
Was, the debit's still equal
they
less
still-
than
yeah.
827,000, equal 825,900.
The debit's still due?
Yeah.
How much did it go up by?
They add up, the debits add up to 825,900. And if you credit anything, it's not gonna add.
Okay, 50, 60. It went 795, and
So
they
you would
took
have,
out
yeah,
20.
you would have to buy more, not buy less.
Oh, we went the wrong way. I had it right, you guys screwed me up.
Should trust us.
Clearly not. Okay. I thought that's, well, yeah, easy to, let's do 70 then. Geez.
Sure.
No wonder you're confused. Okay, here we go, 70, and now that's gonna change. We'll make, the purchase is 70, guys, right? This is probably useful because it's driving you crazy. You have to think about it over and over. Okay, it's just a problem I screwed up. So 795 plus 70, less 20,100. What else do we need as a credit? That credit is the book value, right?
That's 18,800.
Okay, 18,008. Did we make it now?
Made it.
Oh, yeah.
If this is 18,8, right? And the loss was how much again? 1,3. Okay. So what's 18,8 less 1,3? That's the amount of cash it was. How much is that? 17,5. Ta-da! Are we right? Now everything works? So where would we put that 17,5? I sold an asset. Where would it go? Sale of plant equipment. Now let's do one more thing. How much was it? 18,8 or oops, 17,5 we think? Okay. What do you need to do now? That was everything, right? You check out the last one? Okay. Add them up, right? Get these totals. That's total cash flow from operations. This is total cash flow from investing. This is total cash flow from financing, and they have to add up to a negative 31.2. See if you get that. See ya. Sorry I screwed up a neat little problem we found. It does work though, doesn't it? Well, I hope it works. I get it right now. And we will give up. Rework those two problems that I gave you to take home, right? And you should be able to walk through them after this. Not bad at all. It'd be a miracle if this adds up. A lot of computations, huh? You feel really good when you're working on something like this and it works. Oh, wow. Not that.
We didn't add,
Oh, we didn't add back to what? We left something out.
well,
What didn't we add in?
didn't add up.
Good man. What did we not add in? We took out the purchase. That purchase isn't 50, it's 70 to begin with, right? I didn't do a number of things. What didn't I do? I didn't do the 70. What else didn't I do? That's this one. What else do I need? Better do the depreciation, right? How much? Where does that go?
That goes for the,
Yeah. Add back the depreciation expense. You guys didn't even say anything. I did that to you on purpose. This time. Okay. What else do you need? You can add that back. What about the loss? Want to add back the loss? How much is that? 1,3? Yeah. What else do you want to do? Not stop. We got this too, don't we? The 1,3 goes with what? The 17.5? I did put in the 17.5, didn't I? But the amount that I'm explaining the change is 18.8, so it's the 17.5 plus the 1.3 is the 18.8, isn't it? All right, guys? And, need one more, don't I? Or do I have, no, maybe I don't. Do I have it all? I got the sale. I got the sale. No, I got it. I got the sale, the purchase. Yeah, I'm good. I got the gain in. I think that'll do it. So what's the total now?
That works.
Okay, what's the total on the first one? Cash flow from operations. Cash flow from investing. Cash flow from financing. What's cash flow from operations? Are they positive or negative? That depreciation really helped us, didn't it? They're negative, aren't they? Look at all those. So what do we get? What number do you get? Anybody want to give me any of the numbers? This one's 68.9, I think. Do that one. 90,900. 400. 73.4. That one's 73.4. That one's 68.9, isn't it?
So the net cash flow from operations is gonna be a loss of, or a decrease of 26,700.
And this is a decrease too. Okay. So 26.7 negative plus 73.4 negative plus 68.9 positive, is that 31.2? Negative? Did it work? Did we make it?
Yeah, it worked.
Yay! All right. You could do this, couldn't you? And that was really hard. I'd never do anything like that on a test. I'll give you an easier one. You got the idea? Yes. Big time. Okay, that's enough. I'm tired. You're tired. We're all lazy people. Take a break and then